TGIF, everybody. How am I? I still need a haircut. Don't you think I need a haircut, guys? Oh my goodness, I need a shave too. All right. How's everyone doing? Yeah. All right. Thanks for hanging out with us this week, everyone. Hope everyone had a good week. Gold on the verge of breaking out here. That's the way it looks to me. Hold on, I'll show you. Grow it long. Pete, you always have great weeks. So here we go. We're threatening this breakout. Looks like another couple dollars were there, right? Okay, so where are we going? No, I haven't heard about Wirecard. Where are we going? I think up here.
Nearly $2 billion are missing from their accounts. Good morning.
And what are they? A broker?
I think they're facilitating payments, right, or something like that. But anyway, yeah, a lot of weird stuff happening. Good morning, Dale.
Good morning, buddy. All right, so sell. This is where I think gold's heading up to. This line comes in around, it's like around 80. This thing's in my way. Yeah, up around 1780. And your favorite market looks like it's ready for a run as well. In fact, it's outperforming gold here. I think we're going at least to 1850. I think. You know, have you guys caught the medals? I'm talking to our attendees, our warriors today. I know it was pretty boring except for the reversal on Monday, I believe, when I did it about 1707. But anyway, I know that our community is. Right? There's Grega. Maybe he took off the gold. Nope. Okay. So nice gains if you are a member of our community and you got the pattern in play. So Greg along both gold and silver. It's looking for 1800 in gold. So that would mean that we'd get some type of overthrow on the gold. You did? All right, Didier. Nice. All right. So yeah. So if this is coming in here, 1782, and we're going to 1800, but who knows? Maybe next week this line will be there. But I think it's going to be an important level to complete this move in gold. Okay. So a lot of things are happening. And, what do we have this weekend? We have the end of spring. We have the beginning of summer. There's actually a solar eclipse for you Astro guys and GAN people. We have a solar eclipse and the solstice. So, that's running up into next week. This is running up into next week. I'm looking for 3180 next week to attempt shorts, and then I'll risk the highs. So early next week, I expect to be trying this oil, making new highs here. So risk on, risk on, risk on, and EG still rocking, right? So we're probably headed towards this 91.73 level. And the only thing that hasn't responded with risk off would have been a weaker dollar. So, I mean, this is doing this with the dollar having a decent week. And this is one thing that's kind of a mystery. I mean, because EG is working, I tweeted this out yesterday. If this, a lot of people are looking at this as a major support. And if this is a breakdown, here's a question I have for everyone. If this is a breakdown and these are 2-hour candles, Why do I have 20 hours to sell the breakdown? I'm not saying it won't go down, but, you know, it makes me skeptical. We're right there at this, you know, important support that, so, you know, it violated. I showed the pinching of the bands yesterday, and, you know, it breaking down under the band. It would try to get back inside, but it couldn't. But next week, above 1250, it's going to look okay. So, you know, a stronger dollar does play into the scenario, the narrative that we might get some type of high in the S&Ps next week, around that 3180, 3190 level. Although it gets through there, then we're going to 3260. Anyway, looking for some inflection points next week. We'll see if they play out. And I think that's all I really wanted to cover here for the last day. We do have an interview today. Howard Friend's going to be with us. And here's the 10-year yield. So if yields are going to head up a little bit more from here, it should be now with risk on. So here's your 10-year putting in a higher low, but that's after this big break, which we had that huge risk off. So are we going to go, is this A, B, C, maybe up to here and then roll over one more time? If the S&Ps, we get some risk off. And I think there's a good chance for risk off next week. Can't argue with this week, although we're still under the 2-week off number. But if we take out this low, and this is held exactly the 200-day, we could see 2800 is going to be a pretty important support level. But I think really to get a good cleanse from a lot of the euphoria, call put volume, everything, that we really need a break towards 2700 to flush out some of the bullishness that we have in the market before the bulls can take control again. I'm not looking for the March lows to be taken out, but I am looking for some type of ABC or, you know, some type of pullback into here. And any other questions for me, guys, before I turn it over to Blake? VIX. VIX is at support. Okay, so, oh, hi, how are you, Jess? Yeah, quadruple which is part of it. Okay. Yeah, so I think that's covers everything. I hope everyone has a good weekend. The gold is correlated to GDX and Newmont. And in fact, that's going to be an important setup, because if gold, the bullion makes a new high, and I'll show you Newmont. Well, GDX hasn't opened yet, right? GDX opens in a little bit, like an hour and a half, right? So here's Newmont. So gold's about to press new highs, and so maybe Newmont rallies back to 61.8, maybe even up here. But I have a feeling, and you're right, there is relative weakness in the shares compared to bullion this week. So I have a feeling that if when gold's approaching Grega's targets up there, 17 minor, like in the 80s, his is 1800, and the gold shares are not making new highs with the bullion, that would be another reason for me to probe the ending of this gold rally for now up there. So that's going to be something important to watch. Is gold making new highs? Can the gold shares confirm it or diverge from it? Does that answer your question? I don't know who Algobox is. Okay, you're welcome, Amira. TGIF, Blake, buddy.
Hey, good morning, Dale. How's it
How
going?
are you? Pretty good, buddy. I'm glad.
Just you know, as you had mentioned, we're waiting for options expiration, and yeah, I'm still monitoring all the same stuff. I mean,
yeah,
you know, I'm sitting there looking at the euro overnight, kind of hoping it was going to dip a little further. I'm still looking for the 111.50s.
yeah.
Excuse me. It's funny. I don't yawn until I start talking, and then as soon as you start talking, you yawn. It's like, you know, like, oh, isn't when you yawn, it's your
Giving oxygen to your brain.
yeah, and it's like, okay, well, I guess I need brain power because I started speaking. I don't get it. Hey, by the way, you know, regarding the euro, remember there's an European Union Council meeting, EU Council meeting that's happening right now. We don't know when the press conference is going to be. We just got to kind of keep a heads up for headlines that might, you know, hit the wires here over the next hour. Because I think it started, if I'm not mistaken, it was like 4 a.m. Eastern when the European Council meeting started, I believe. And then, you know, here we are several hours later that it may, you know, we may get some sort of headline soon. But like I said, I've been sitting here waiting for the euro to dip back, you know, towards 111.50 and
Good patience.
huh?
Good patience.
Well, I mean, it's like,
You waited.
you know, bored. I mean, you know, it's like,
Well,
no,
then you need patience.
yeah, I guess so. You know, the cable, we've been talking a lot about the cable, at least in the chat rooms. We just about hit the 618. I know Amanda, she's picking up some cable down here. We have like an ABCD completion pretty much. So I think this whole area is going to offer some support near term. Now, you know, I'm not really sure if the cable at this point is going to, you know, rally back to 127, but I think that there's an argument that we could see a bounce at, you know, current levels, you know, bounce maybe back to 124.50 or so. Hold on. EU leaders and summit without consensus on recovery plan. Oh, that's not good. Shoot. Well, here goes the euro. We might actually see lower levels in the euro now. That's not good. That's not good. So let's see if the euro pushes through these lows. And, you know, and that's one of those things I was, you know, hoping that we'd have some sort of recovery plan, some sort of unity. And obviously they can't even get that straight. So, yeah, so we got to be careful with the euro. The euro might pull back here. It's not affecting equities. I mean, you look at the S&P and the S&P is at highs in the session. It's just like, but this is options expiration, so just remember that. Euro's not moving a whole lot. I thought it would move a little bit more than it has. I mean, we saw a 10 pip drop and then it's just kind of sitting here. So nothing. Okay. And I love it how this always all this stuff always releases when I'm talking too. You know, it's hard for me to talk and trade and speak and rub my belly at the same time.
That's why they're happening, so you can demonstrate how adept you are at.
Yeah, do it on the vid cam, on the video.
Yes. So anyway, so yeah, the cable, you know, looks like we're going to get a little bit of a lift here. Aussie's held up really well, but you know, we still have this like triangle pattern, and we're nearing the upper end of the triangle pattern. So just keep that in mind if you're, you know, if you're an Aussie bull. Kiwi downtrend lines coming into play. We had very limited downside out of the triangle. And so, you know, I don't know if you could actually probably just do something like this. I'm sure it's going to be more like this. And this trend line right here is being challenged right now. Dollar Canadian, it's not doing a whole lot. I thought we'd get a little bit more upside out of this triangle this wedge that we broke out of yesterday. Nothing. Dollar Mex has held up pretty well. And you know, this is one of those that I think you really got to keep an eye on, because if stocks actually do come under pressure, this one has held up very well. Yesterday I played it to the long side, did well with it. It went a lot farther than I thought it was going to. You know, I made like this little move right here, and I was like, oh, that should be it. Move across the, resistance, and I'm like, oh, I'll just take some profits here because it's probably not going to go much further than that, and it just continued to squeeze. But the fact of the matter is, the dollar Mexican peso is holding up really well, even as stocks are have some upside pressure. So if stocks do start to sell off a little bit, we might get a bigger move up in the dollar Mexican peso. All right. Well, look at the euro, just right back. Interesting. I think this is more dollar weakness as a whole versus euro strength. Yeah, and the reason why I say that is, you can see the cables bouncing. Aussie's still holding onto its bid. Kiwi's still holding onto its bid. Dollar Canadian's come down a little bit. Dollar Mexican peso is doing its own thing. Swissie's just kind of sitting there. US dollar, Norwegian krona is not doing much. Dollar yen's not doing anything. I mean, look at these moves in FX. There's nothing. So I'm hoping that we see some sort of I'm hoping we see some sort of volatility following OPEX. Now let's talk a little bit about gold. We had a long conversation yesterday about gold, right?
Yep.
And as I mentioned to you guys yesterday, it's like, shorting gold fundamentally just doesn't make sense. It doesn't make sense to me at all. And looking at price action yesterday, I have to reiterate, what does not go down usually only has one other direction to go. And then, the fact of the matter is we're holding up pretty well, and so now we're facing resistance. Like I said, I wouldn't necessarily be long gold right at this moment. I sure as hell wouldn't want to be short. And that was my comments from yesterday. And today, here we are, we're just grinding up towards the highs. Now, if you are a gold bear for whatever reason, this is a good risk reward to be short here. Although I do feel that it's going to be breaking out, and it is going to be breaking higher at some point, whether it's today or whether it dips back down and then rallies. I just think it is, holding up really well. You can see relative strength is completely worked off overbought conditions. The risk right now is that we do exactly what happened right here. And you can see what happened as a result, right? This move happened as RSI broke out, reset. We've reset. We start breaking out here. We're going to highs. So, so that's how I'm looking at gold right now. That it could continue higher following, a breakout in relative strength. And silver, silver is holding up pretty well too. I look at this as a nice pennant that's developing. Let's see here. It's a nice pennant that's developing, and it's up a little bit today, but I think silver overall looks pretty bullish. So, anyway, that's what I'm seeing there. Let's see, anything else that I really, it looks like Kiwi's pushing higher, as is it's just the dollar across the board is kind of pushing lower here. But there's a Kiwi pushing up against its highs of the day. Euro's not too far away from its high. Euro's going to end up actually squeezing.
Blake,
because my opinion here with the euros, you probably got a lot of people that, sold the euro on that headline, So
and you talked about that head and shoulders, and that we could get a false breakdown, and that it's everyone's looking at it as a head and shoulders. We got exactly.
Yeah, everybody's trying to trade it short, and like I said, I've been wanting to get long down here at the 38% retracement. This is, you can see the fib here, Dale.
Okay. Yeah.
The 38% retracement comes in right at 111.50. It's a breakout point. I've been wanting to get long down there all all week, and
Everyone
so
else does too. Maybe that's why it doesn't get there.
well,
what I
it depends. Maybe. Sorry.
Yeah.
A lot of people have been trying to short the euro too. You know,
Yeah, true.
probably pretty frustrating trade trying to be on the short side. I mean, it's slowly grinding in your direction, but you know,
Any breakdown that takes like 10 4-hour candles and it's still there, it's the breakdown, I'm pretty suspicious of. And that's what it did yesterday.
So anyway, it is a pretty slow session. One of the other things that I wanted to show you guys real quick. Oh wait. Okay, here's the Aussie. Hold on, let's see. Aussie squeezing, right up against resistance here. Look at the euro. It's popping right above the highs. You knew that was going to happen.
Merkel just said they're happy with the basic structure of the EU recovery fund.
Oh.
Yeah.
Well, that's silly. I mean, I think the market was probably looking for more, but maybe that's why the euro is squeezing. Well, I don't know. I think that I actually think the euro is squeezing because it just didn't go down. It's kind of like the same phenomenon that's happening with gold. It's not going down, so anybody who's short is getting out, and that's what's happening with probably euro, regardless of the news, because it didn't go down on that headline. So. Thanks, Stelios. I'm now seeing the headline here. That was a Reuters headline. So anyway, they're going to continue negotiations on EU recovery fund in mid-July. Oh, the summer, it just drags on. So anyway, cable squeezing, Aussie squeezing, Kiwi squeezing. Canadian should be coming off a little bit. Peso should be coming off a little bit, and it is. The Swissy. Now, speaking of the Swissy, this is probably one thing I'm going to leave you guys with. Let's take a look at the Euro Swiss. Somebody in our chat yesterday. No, I'm sorry. On the daily roundup webinar, asked me about the Euro Swiss and my thoughts here. And the fact of the matter is, we're holding up this, 106. This 106.50 level. We're holding it pretty well. I would not want to be short here because this is like some pretty big. You can see this is a big breakout point. It's a 618. It's a lot of support resistance right around here. I wouldn't want to be on the short side. Now, if we broke through 106.40, I mean, we should see 106 pretty quickly. But yeah, I think the trade right now, I think the trade is to be long Euro Swiss, with just really tight stops. That's what I would think.
The closer to 105, the more you have the certainty that you have. That the S&P has your back, because
right. No, I agree with that, but they change their levels. They become buyers at certain areas, and to me it looks like they're a buyer here, and technically it makes sense. But yeah, I mean, the closer you are to 105, the better off euro is going to be, I think. But yeah, so well, Steve, good morning.
Good morning, Blake.
No, I cannot stop yawning. It's it's at the end of the week. I just get so beat down,
Sleep deprived, yeah.
Yeah, I'm sleep deprived, and and then on top of it all, the markets have been pretty slow this week. Actually,
it's all been in cable. All the cable's the only mover, really.
Yeah, I mean the cable. After on Tuesday when it failed at the 200-day moving average here, it's just been
That was your chart of the day too. That it could do exactly what it did. It was that chart of the day.
One of our traders in the chat rooms asked, where is the chart of the day, and that is in our blog. So if you go to our website, that's one of the free sections of our blog. You can go and read the chart of the day. It's there, and then obviously if we have something really important we feel we need to blog as a team, we do it here as well. But yeah, if you guys are looking to find where the charts
stuff,
I don't put something that I think is going to be relatively interesting for the next 24 hours. But it isn't always the best setup because I try to reserve those for the ForexAnalytix team, but then, or the ForexAnalytix customer, excuse me. And then it just, it really depends on the day too. You know, sometimes I, you know,
You feel more generous
on
certain
days,
days.
right? Right, exactly.
Yeah.
So, but anyway,
I'm generous on blue moons.
Are you?
Yeah.
Blue moons, like the beer, Blue Moon?
Yeah. You know, where you have a full moon twice in a month.
No, I'm talking about the beer.
I've had it. Yeah, it's pretty good.
Oh, it's actually one of my more favorite beers.
Okay.
Yeah.
All right.
It gives me a headache, but anyway. All right, so Steve, how's it going? I didn't want to go into all the crosses, which I was about ready to, and I'm like, nah, I can't do that to Steve. Because
if you want to, go ahead.
No, I'm going to leave it for you, so you got stuff to talk about, because I could have burned through those pretty quickly, but no, I'm going to leave them for you. Hopefully, you know, we get some activity going in options expiration. So, with options expiration, is there anything that our traders should be looking out for? Stelios and Steve, what do you guys think?
Well, a good question. I mean, we're seeing a squeeze, and usually what happens is after options expiration, there's usually reversals, but you know, who knows where this market could continue to go. So I don't have anything constructive to say, I'm afraid. Sorry.
Okay. Well, I mean, you know, it is triple witching. So, Steve, did you have anything that you were thinking regarding options expiration?
I closed my second pattern play yesterday, the one that was short the S&P, about at break even, because, you know, that consolidation was sustained more than I would have wanted to do. And, you know, I'm not really surprised that we're seeing this buoyancy today in risk assets. So I think that until at least we get to that point, the expiration, I don't really see much of a possibility of a reversal. Now, as Stelios said, after that, I wouldn't be that much surprised if we see some type of a reversal, but until that happens, I doubt that the tune is going to change much.
Yeah. Do you have a level, Steve, where you'd want to short S&Ps if it continued up?
Well, with that being said, I'm gonna let Steve actually take the chart so he can actually look at the S&P. And I just want to say, everybody, thank you for tuning in this week. You know, for those of you guys that are, yeah, you do the same. For those of you that are in the, you know, ForexAnalytix chat room, I'll see you guys in there. Obviously, we have, with options expiration, we'll be chatting a lot today. But for the rest of you guys and gals, thank you for your continued support, and don't forget to visit our webinar sponsor, Forest Park FX. So, guys, have a great one. Good luck. And Steve, I'm sure everybody wants to see what you have to say with the S&P.
Thank you, mate.
Thanks,
Bye-bye.
guys.
Thank you, Blake.
See you, Blake.
Bye. See you, Estelle. See you, Coach. Have a great one.
Thanks.
Okay.
So
here's the little triangle, since you asked Dale. Here's the little triangle that I showed yesterday when we were near the lows, actually. Yeah. And, you know, we seem to be breaking above it. Or attempting to. So, you know, I wouldn't be surprised to see another attack of the previous high. I think it's going to be even more dovish from the market if it actually produces a higher high from that 32, 33 high, and, you know, towards 32.60, 32.80, and reverse from there. I wouldn't be very much surprised.
Where will that pink trend line that it broke through come in? I know you got some news.
Above 3,300.
No, the lower one.
3160, 3165, something like that.
Okay, just above the high. Okay.
Yeah.
All right.
So
thank you, buddy.
We have current account deficit for the US, more than 100 billion expected. I mean, these numbers are so ridiculous, whatever. Canadian retail sales also expected at minus 15.1, with the previous being at minus 10. Canadian core retail sales also expected. The forecast is for minus 13.5, with previous being minus 0.4. So bad data expected out of Canada. Let's see what we get, and let's see if that's going to produce any movement for the USD CAD. I'm going to switch to it once we get the data. Let's go. Still
Bit late.
waiting.
Oh,
There
no,
we
there we
go.
go.
Oh, much
Yeah, bad
worse.
Canadian.
Yeah, bad Canadian data, and still we don't have the current account, but let's switch to USD CAD on the 4-hour chart. Here it is.
These numbers are very volatile. We said the same with retail sales
Yes,
yesterday,
they
right?
are indeed. They are
The
indeed.
UK numbers came in a lot better than expected, and the pound did nothing. So it's very difficult to gauge the trough, the COVID-related trough, and then the reversal.
US current account balance, by the way, came out at minus 104.2 billion. So a little bit worse than the abysmal number that was expected.
What's 1.2 billion, between friends?
Yeah, between friends, yes, indeed. I mean, soon enough, we're going to be saying the exact same thing, but it's going to be about trillions.
Trillions, yeah, I know.
Yeah.
Okay.
And soon enough, if they continue like that, 1.2 trillions is probably going to be worth more or less what 1.2 billion is worth today.
Yeah.
So USD CAD, as we see, still consolidating in this triangle. I'm still expecting that it's extremely likely to see at least one more leg to the upside. So Stelio, before we go on the charts, go ahead. What did we have overnight and this morning?
Yep. Let's start with data. We had a few interesting prints. Aussie retail sales plus 16%. That's from minus 17 the previous print. For some reason, the market was expecting something like plus 30%, which would take it way above where we were before, because remember the drop was 17. Anyway, it was a big positive print, but a lot less than expected. We had a big surprise in UK retail sales. Last month it was a minus 18% drop. This month it came in at plus 12% gain, expected 5.7. Again, the pound didn't move at all. If anything, it's still retreating.
Weak.
And I think it's all about positioning on this, because if you think about it, yesterday the Bank of England was not as dovish as expected. We got these numbers which were a lot better than expected, and still the pound is retreating. So I think it's all about positioning and flushing longs out probably. We had the Canadian data. Okay, we covered that. And, a couple of other things like the Chinese are now talking about accelerating their purchases in terms of farm agricultural products, etc. They want to reach the agreed levels in phase one.
Can I take the under?
Yeah, I know.
Can I bet on the fact that they won't?
This kind of is a normal event following some comments about 5G and Huawei on the US side, which were not as negative as they had been before. So it's like a tit for tat game, and as with everything, politicians are there to negotiate.
Of course. I mean,
what they do.
And as I said, this is not a comment targeted at Trump specifically, because I unfortunately I believe that the vast majority of politicians would do the same.
Yeah.
I have full faith in politicians to make deals that will increase their chances of getting re-elected, even if that goes against national interests. I think 95% of politicians would do that, no questions asked.
Yeah. Unfortunately. I agree. So so that's what's happening on the US-China front, and also, was it Merkel who also said that? Yes, it was Merkel who said today that she's hopeful that there's going to be some kind of EU-UK agreement by fall. We've heard this many times before, and we still have nothing. So I think it goes in from one ear and comes out the other. And another headline which I read today, which is a little bit scary, is the state of Ohio. In the US, they're making payments to people who are out of work, right, in the whole of US. And the state of Ohio asked the federal government today to borrow $3.1 billion because basically they're bust, and their unemployment fund is broke.
Yeah,
so,
many states are actually bust, and the states that were actually frugal and they're not bust must be feeling, very, very stupid.
Well, that's the agreement, right? In the US, contrary to the EU, surplus states are directly funding deficit states.
Yes, of course, and I have nothing against it. I mean,
Yeah.
it makes sense. But what I'm trying to say here is that, as it seems, those that have been frugal have been punished by
Yep.
fiscal policy. So in essence, there was no benefit of being, conservative, having to do with public spending and having to do with your balance sheet, because at the end of the day, everybody received aid, and no matter how bad things were prior to coronavirus. So
Yeah.
I think that's going to once again inject even more moral hazard in the system, and I think that going forward, governors of states that were at a much better fiscal position are going to be, why shouldn't they just give more and be more likable, and try to be conservative. At the end of the day, everybody gets bailed out from the money tree that's called the Fed.
Yeah, it's a moral hazard, like you said, and well, let's see how that goes. The other thing we have today is something I look at in terms of oil. We have the US Baker Hughes oil rig count, and this for me is important because it shows what production is doing in the US. And if you guys remember the big drop in oil, what was it, 2015, 14, 15, that sparked it was shale oil, US shale oil. And we had a huge increase in production.
Yeah, they are the marginal producers.
They are the
They've
marginal
been
producers,
for many
exactly.
years.
And
Yeah.
for me, this is a very big indicator on which way oil is going, because over the past 4 or 5 years, the average of this number of the rig counts has been around 700. And last week it printed at 199, and it's expected to drop more. So you're seeing a big chunk of these producers shutting down their wells. And remember, this does not go back up by the flip of a switch. So it's
there are a lot of costs involved and time
yeah.
involved to get things back and running once
Exactly.
you switch down things, which is exactly what we've been saying about the economy as well.
Exactly.
That a V-shaped recovery to bring you exactly where you were is impossible, because you can switch things off by the flip of a button, but it's not that you can do the opposite. So
Yeah.
same thing with them.
And from what I'd read, obviously I'm not an expert, but I'd read that the average cost of production in the US is something like $45.
Yeah,
or
it's
something
very,
like that.
very high.
So
it's very high.
Oil is at 40 now. It has to go above 45 and stay there for a bit before
they decide to switch back on producing. Yes, because
they have a lot of debt. They're highly leveraged. They're not going to risk it that quickly. So I'm just saying this is something to watch and to keep in the back of your mind. And other than that, equities are just going. I'm considering putting in an offer. I want to short them, but I'm not shorting them yet. Last time I shorted them, I made like 20 points or so. I could have made more, but anyway, they rallied back. I think I'm going to short them just above new highs. I think we're going to make new highs. And like you said before, what was it, 32.50 or something like that? And above there, or 32.50, 32.60, I think.
Yeah, 32.60 is a nice confluence of resistances, for example.
Yeah, start slowly, because this is a dangerous trade, as we all know.
Oh, so, yeah, of course.
Yeah.
For the time being, it is.
For the time being, yes.
The fun part is that the news, I got like headlines today, that were mentioning, like, it's funny when reporters try to assign a specific reason for stocks, for example, going up. So it was like, stocks are well bid because of hopes of coronavirus vaccine. And to put in the conversation with what Joe mentioned on the chat as well, he says, with all the talk about coronavirus pickup in US and Beijing, how are cases in Europe? The answer is that cases in Europe are also, in many countries, somewhat increasing. Same thing is happening to the US and in other parts of the world. Now, you see the funny part that they're trying to excuse the risk on by saying hopes of a vaccine are increasing, which is a hope. The only certain thing is that cases are increasing. Now, hoping for a vaccine is one thing, but reality is that cases are increasing. Reality is also that increasing hopes of the vaccine means absolutely nothing. which once again shows that when the market is is in the situation it currently is, even low expectations of a positive outcome are immediately priced in the market, while anything that's negative or potentially negative is completely ignored by the market until the very point that the market cannot anymore ignore it because it has blown up or whatever, like it happened in 20th of February, because I mean everything was out there 5 days ago. It was more than obvious that coronavirus is a huge problem and it's going to create a big disruption to the global economy, and markets were still rallying to all-time highs. And suddenly at 20th of February, the market decided that it must immediately and in expedited manner price in what was refusing to price in during the past like two months. So I'm expecting that more or less the same thing is going to happen here as well. We're going to keep rallying until one day suddenly the market is going to decide to price in 2, 3, 4 things that are really negative that it was ignoring, and then you're going to see another dump lower. But this is the market environment that this type of this type of market manipulation is creating, right? Everybody's buying with complete ignorance of what else is happening until the market is just tanking, and then there is a backstop again. They come out, they say they're going to provide more stimulus, more liquidity, whatever, and then everything rallies on hopes again, rinse and repeat again and again. That's why we will keep having what initially they called events that happen like once in a lifetime are going to be now events that will be happening like once every few years. But it is what it is.
We have a few friends who are saying that there's not going to be another lockdown, even if there's a flare-up in cases.
I agree with that.
I agree with that, but the question is, the governments don't have to lock down. If cases start going up, I know. I personally, I'm not going to go out spending.
Exactly.
So it's going to be self-imposed, I think. By people.
That's the best point, Stelio. That yes, they're not going to completely lock down the economy. We totally agree with that. It's a very low chance because they can't afford it in essence. They'll find other ways, as what we have said since a long time ago, that perhaps isolating people that are in frail health or a lot more susceptible to developing coronavirus side effects, the really bad side effects that can lead to death or whatever, and let the vast majority of the productive population keep on doing what they're doing, so the economy doesn't completely stall. But as Stelios mentioned, if we get another flare-up in coronavirus, you're still going to have a huge hit to the economy because people are going...
Τι κάνατε?
Oh,
sorry. I'm speaking to my girls here. Sorry.
I know. So yeah, people are going to self-isolate. Again, the real economy, retail sellers, retail shops, restaurants, cafes, bars, and everything else is going to stop working. And keep in mind that we've switched developed economies in this really unsustainable economic model, which is a big part of the employed people are working in the service sector, and production has really decreased. So when you have an economy that's based more than 70% in consumption, and you get such an event, people in essence again self-isolating, you're going to have a huge economic impact.
They may have lockdowns, guys, but only instead of countrywide, it could be a city or an area of a city where there's a big
still
outbreak.
The economic impact is going to be huge, Dale.
Yeah.
So the market is completely refusing to price in anything like that. The market actually is pricing in that everything is great because we're currently higher than where we were in February. Look at the Nasdaq. The Nasdaq started the year. There we go. So the Nasdaq started
Grantham said this is the real McCoy for a bubble. You know that guy. He called the 2000 and 2008 bubbles, and he said he was interviewed on CNBC. Jeremy Grantham.
Mhm.
He's kind of a legend, and he said Wilford asked him, should you be out of all equities? He still says you should have some emerging, but he actually said, I would have 0% exposure to U.S. equities and maybe even less than that, which we know what
Meaning
that means.
short, yeah.
Yeah.
Yeah, I mean, just think of that, Dale. Let's assume you were in a coma since December and you woke up today and you asked, okay, where are the stock indices? Where's the Nasdaq? And they told you the Nasdaq is 16.5% up year to date. I mean,
Right.
would you be able to believe what has happened in between?
Only if I woke up with a mask on.
I mean,
go, what the
imagine
hell do you putting a mask on me for? I'm in the
16 and a half 16.5% higher in 6 months is the pace of an excellent year in stocks. Assuming that everything has, has been working out nicely. You know what I mean? The economy is doing okay. Companies' earnings are increasing. Expectations for the future are becoming more rosy. Because, projecting 6 months forward, if we resume on that pace, somebody would assume that we're going to be 35% higher in the year. That would be an amazing year for stocks, right? And it's the year that we've had one catastrophe after the next. So yeah, I mean, yeah. I think that if there is anybody that questions that this is a bubble behavior, they should get checked. I'm not saying that somebody should be short, because bubbles, if they can do one thing excellently, is extend more than the average person is expecting.
Yeah, but that's what Grantham said.
Exactly. But I mean, you want to be long because you believe this bubble is going to go, is going to extend forward in the future. I totally get it. But I hope there's nobody long that their main thesis is that things are going where they're going, having to do with stock prices, because that's normal, right? I mean, you're either long because you believe this bubble has more to run forward, which is likely, or
the
you're
Fed
out
has blown more bubbles than Lawrence Welk, which you probably don't know who he is.
No, I don't, but I can assume more or less.
Well, he had a bubble machine on his show where, he came on and there were a bunch of bubbles. Anyway, Ziggy knows who he is. If you're still here, Ziggy.
So, anyhow, nothing really much more to say about stocks. We've already said what it is. I'm watching for 3160 as an area, 3260 as a possible area of upside if we do move to new all-time highs. Otherwise, as I said, I want to see by the end of the day if we're going to see some type of a reversal after we get the expiration. That's also going to be interesting. Keep in mind that we have, of course, several divergences having to do with this type of price action, but also at the same time, don't forget that divergences, on their own are not signals, right? Because they can persist for quite some time. Gold is an excellent example of that. Gold and silver, Blake mentioned it. I just want to say once again that I'm in full agreement. Recent consolidations seem exactly like that. Consolidations. I think you should keep looking higher until proven otherwise. Crude oil still very nicely bid. I need to stress out here that crude is the one that's showing the biggest divergences having to do with the short-term time horizon. Another thing to keep note of is I sold the day before yesterday, I sold my stocks in Total, and Total hasn't actually moved higher. It's actually a little bit lower from where I sold my stocks, despite crude having rallied from the moment I sold my stocks another 9% higher. Bottom line, what I'm trying to say here, because I checked the other big oil companies, oil is not only seeing divergences, we're not only seeing divergences just having to do with momentum and other indicators, but also if you look at correlated stocks, they're also seeing divergence. They don't seem to want to be following anymore crude on its way up. So I would be very, very careful. As I've said, $40 is an area of interest in my opinion, and we're getting very close to that. I don't think you should be looking on the long side of crude anymore, not until we see a pullback lower. And obviously that pullback lower is going to coincide more or less. Sometimes they can, you know, they can have a lag of like 1-2 days. Sometimes one leads the other, or vice versa. When stocks roll over, in that case, I would be looking for a revisit, if we're talking about the continuous, right, of the $29 area before getting interested again in buying crude through. I'll see what kind of instrument I'm going to use this time. I mean, previous time was total stocks. You know, I'll see what I'm going to use next time. Euro Aussie moving with stocks. It's a pattern in play. Yeah, Euro Aussie is very, very highly correlated to risk assets, inversely correlated, right? So, you know, when stocks move lower, Euro Aussie moves higher. So in that respect, we also see a divergence here, because not a big divergence, but let me add the S&P here so you can see it. So here's the SPX. Oh, sorry. I will actually add on this chart the inverse of SPX so you can see it more clearly. So we're going to say 1 over SPX 500. There we go. You see? So there is some divergence here, right? I mean, Euro Aussie is actually pointing to lower stock prices. So there is some divergence. Although, as you see, the type of the move is the same. Sometimes it's exaggerated by one instrument or the other. For example, I mean, here we had stocks move higher than the Euro Aussie lower. Same thing here. We had some divergence and we still have it. But at some point, this divergence is going to close one direction or the other. But as you see, the general direction in which they're moving is exactly the same. I mean, we had this pullback in stocks here, which of course looks like a push higher because we've put the inverse of SPX here. At the same time, the Euro Aussie were jumping higher. Now the Euro Aussie is slowly drifting lower as the S&P is slowly drifting higher. I repeat again, this is the inverse of the S&P. So whatever you see here, it's the exact opposite that the S&P is doing. So yeah, I mean, there's no question about it. Once stocks turn lower, the Euro Aussie is going to produce at least one more leg of upside. The same thing applies to the Euro Kiwi. So the Euro Kiwi is also going to produce another leg to the upside once risk assets start tanking. So, you know, you need to, unfortunately, and I actually saw a chart. I have been saying that since a long time ago, and I also saw a chart, I think it was yesterday night, my time. JP Morgan actually posted a chart saying that cross-asset correlations are at 20-year highs, implying limited scope of diversification, which is, if you remember, it's one of the first things we have been saying here on this webinar since, you know, the first days of the rebound in stocks, that, you know, we kept saying that, you know, be careful a little bit because, like it or not, the vast majority of assets have now transformed due to the huge manipulation, you know, from the central banks in the financial markets. Everything has more or less transformed in a RORO trade, risk on, risk off trade, even currencies. And as I said, JP Morgan actually put that on a chart. I have it on my phone. Let me upload it so I can show it to you. Give me a second to upload it. There we go. Okay. So Let me open it up so you can see it. There it is. You see? So this is the chart. Which means that, like it or not, you want to call yourself an FX trader or whatever else, you know, welcome to trading stocks and stock indices, because that's what you're actually doing now. Like it or not, you know, you want to trade, you'd rather pay close attention to what risk assets are doing in stocks, because either you know it, either you acknowledge it or not, this is what you're currently trading, more or less. I mean, unless you choose a currency pair like the Aussie Kiwi or the Euro Pound, you know, which are a lot less affected, or cross rates like that, or the, you know, Aussie CAD, or, you know, the Kiwi CAD, or, you know, trading equivalent currencies against each other, you're more or less trading risk on, risk off. That's what you're doing. Okay, let me go through some of your questions. I have a dozen international consulting clients, says Kirk. Net worth 100 plus million. They have been moving money to US banks to have dollar exposure. Only a portion to buy on a stock or real estate pullback. Mostly just currency exposure. Question: to what extent does that move to preserve capital in favored currencies, mainly dollar, manifest on chart? That is, what does the pressure point look like to create a sharp move up in the dollar? That's a good question. And by the way, Kirk, I have to tell you that my personal opinion is that the people that are doing that are going to be decimated. Not yet. I don't expect that the dollar is going to fail yet. So I believe that in the short to medium term, they might actually do well. But I believe that those people are going to end up getting decimated in their currency exposure. Because I think that sooner rather than later, when this new situation comes to some type of an equilibrium and normalization, I think that the dollar is going to then take the path of least resistance, which is lower. I think a lot of people currently are looking for the dollar to turn lower because of the obvious factors, which are the amazing distraction of you know, the fiscal picture of the US. I mean, deficits are exploding in a way that I think has never happened in the past. The debt is in a trajectory that is completely unsustainable. It's even hard to track it on a chart. And at the same time, monetary policy has become, you know, insane, the least to say. So I do think that it's not going to be easy for the dollar, and for other reasons, of course. I don't think it's going to be easy for the dollar to get destroyed like immediately. But I think that once things settle down and we're off this period of extreme volatility and everybody monitoring things like how many cases did we have, are we going to have a new vaccine or not, I think that the dollar is going to do very, very bad. And I think that those people have been moving their money in expectations that at least holding cash in dollars is going to be some type of guarantee. I think that they're making a huge mistake. If they really want to preserve their money, I think that they should be putting their money in tangible assets that can actually preserve value and not the US dollar. Having to do with what can happen here with the dollar and the dollar chart, for the time being, first of all, the dollar remains, you know, without trend. I mean, we've had this volatility and this sharp move lower, even sharper move higher, and now we've had a couple of legs lower in the dollar. But first of all, we've held above the previous low, which is quite important. Second of all, you know, I don't really see anything on this chart that tells me that the dollar is about to get demolished. So especially seeing a lot of people now becoming, for all the good reasons, you know, very skeptical about the future of the dollar, and knowing how devious this market is and how much it's prone to first, you know, destroying any fundamental thesis that makes sense before it actually follows, you know, common sense and common logic. I don't know, but my gut feeling tells me that, the best trick this market can pull is first produce a higher high in the dollar, like above 103, then seeing everybody capitulate and, seeing articles everywhere saying like the dollar is the king again. The world realized that in this new reality, irrespective of monetary policy, deficits don't matter and monetary policy doesn't matter much because the dollar is still the world reserve currency and the US is still #1. And that's where I will start very actively looking for the dollar to, roll over and die.
Okay, well then look for a McDonald's ad or a Burger King ad saying the dollar is king and having a special for $1.
Yeah,
in fact, that happened before.
Yeah, something like that. Something like that. When you see magazines and, everybody else like, putting big headlines like Dollar King and, Dollar Strong and, America First and, all that usual things you see at the highs, that's when you should be very, very careful in being in the wrong side of the market. Do we have an interview today? Because usually we don't have on Fridays.
Howard Friend.
Howard, which is your friend?
That's his last name.
No, I'm kidding.
He's a friend to all traders that listen to him.
Okay,
because I've seen Howard make some outstanding calls on the euro, and I haven't talked to him in quite some time.
Kirk says I'm recommending gold and farmland. I couldn't agree more with both recommendations, by the way, Kirk.
Yeah, Kirk. In fact, I bought some farmland, and I'm looking for a tenant farmer. Are you willing to go out? Till the soil with me, man. Huh?
Which brings us back many decades to Road to Serfdom, right? Yeah. Dale, which is a book that everybody should read. Actually, I read it after Leon having recommended it, which I should have done prior to that. But yes,
some people some people read it, some people live it. Anyway, so all right.
Yeah, but the whole point is that soon enough you're going to be wishing you were a serf. You know what I mean?
Yeah. So Kirk's a master gardener. I am too. I specialize in deflowering. All right, so I'm going to bring Howard on. Great job. Okay. Great job, buddy, and have a great weekend, Steve. And
you too, and everybody else, of course, and we'll be here on Monday as we always are.
I'm going to get Howard all set up here now. Stick around if you want to know what's going to happen to the euro. His work is top-notch. So, Howard, I just unmuted you. Welcome back to Face.
Yeah, hi, how you doing? Can you hear me?
Can hear you loud and clear, and I don't know if you've used Zoom before, but there's a drop-down menu with a green box that says share.
Yeah.
And then you could share your screen.
Okay. Do you want to see my beautiful face, or is it better just to sort of talk over?
That's completely optional. Yeah, go ahead.
Okay, one sec.
Just hit your video and.
Let me see. Join audio.
Audio's good. Leave that
Start
alone.
Video should get me.
Yeah, it's video.
There you go. Cannot start your video because the host has stopped it. Okay.
Oh wait, let me fix that for you. Okay, so I'll make you a co-host. Now you can share your video as well. There you go.
Nice to meet you, Steve, anyway.
Nice to meet you, Howard.
Yeah, Steve Volge, Howard Friend.
Okay, I click on start video.
Should work now because I made you a co-host.
Yeah.
Or didn't I? No, it didn't work before. Now it did. Try again.
Okay, here we go.
Yeah, there you go.
There we go.
Oh, hey Howard, how are you?
Hi. How
So
you
you're you're full screen. So nice to see you. And how long have you been trading, Howard? Because
Dale,
hey,
as you see, I saved actually. I look younger, don't I?
Yeah, I've been trading since 2006-07.
Okay. Because I don't, it looks like it's aged you for being 23 years old. Anyway, so
I'm a very young 52.
Okay, well, it's going to be very important for you to share your screen. If you could do that, that's a green box.
Button, Howard.
Let me do that. 1 second.
Okay.
Here we go. Let's try this.
You don't look 52, by the way. I can tell you that much. No, honestly.
There you go. Can you see it?
Yeah.
Got you. Got you.
Excellent.
All
Excellent.
all right. All
Okay.
right. Beautiful, Howard. So, looking at this long-term chart of the Dixie, and looks like you're a bear here, buddy.
Yeah, I am. So let me just get move this thing out of the way. So basically, what I've got is obviously the long-term trend for dollar is down. And you know, when we're talking about long-term trends, we're talking about mega long-term trends. So looking at it with an Elliott head on, what I've got is a similar situation we are, I think, to where we were back in 2000, 2001. Okay. Where the dollar had been, you know, positive for quite some time, had a good multi-year advance, but ultimately it was a corrective advance. So just to sort of go through the structure, way back then we had the dollar top at the Plaza Accord, and after that we had the big depreciation in the US dollar. That kind of found a temporary base back in '87. I think they did the Louvre Accord back then. To kind of stabilize it because it was falling to
Plaza Accord.
I think they did the Plaza to devalue the dollar, and the Louvre to kind of stop it falling too much.
Oh, okay.
Anyway, but that was the back in '87 or so. That was the momentum low for that particular move, and from that point onwards, we saw that kind of like a big bounce, quite a large bounce, and then this kind of choppy decline to the new all-time low, and then we saw the big kind of rally to follow. So using kind of Elliott, if people are into that, sometimes it can work, but it seems to work on some of these big picture things. The decline from this point here was a kind of choppy B wave or B leg decline to the new low in a kind of irregular flat bear market correction. Okay. So effectively the impulse move down there, then the A, then the B, and then the kind of 5-wave C wave move up to the 2000, 2001 peak. And then we had this kind of like this very violent breakdown, 1, 2, 3, 4, 5 to the momentum low here. So at this point here, we were at a similar stage to where we were back in '87, '88. That was the momentum low. So the rate of change, all these kind of typical oscillators that you might want to whack on these charts, they tend to peak or top out in either wave 5 or wave 3 of wave 5 kind of thing, before you start to see this correction or counter trend movements. And since that point, we've seen that kind of choppy decline, this B leg moving to the new low, which was what, 2011?
Yeah, and look at that glaring divergence on that.
Sorry?
The glaring divergence of the rate of change when
we're
making new lows. Yeah.
Exactly, yeah. So that's a sort of typical B wave phenomenon which we saw in the last cycle here. Mm-hmm. So when we got the momentum, the price low in '95, that was the massive divergence on the rate of change, the 24-month rate of change, which I like to use. So that kind of called the bottom for that particular, for the B wave. And since then, we've had this kind of 5-wave structure to the recent high.
Yeah.
So this is where I think we are now. That's why I've circled it in green. So I think we're at a very similar situation to where we were back in 2001, 2002 when it topped out.
What would change the count?
I don't think a whole lot would change the count. I think we could see a marginal new high. That always can happen. But I think to change the count, you've got to start to see it really ramping up in some sort of third wave up here.
Okay.
So you could.
So we could go 105 or so and not change it.
Yeah, I'd say so.
Okay.
But I think when you get to this kind of situation, I think playing around with these short-term subwaves against the trend can be a little bit dangerous if your big picture view is down.
Okay.
So so just sort of coming back to the recent action in terms of, you got the big divergence on this recent flip higher on the dollar.
Okay. Why did you choose rate of change as a momentum indicator?
Yeah, I like rate of change because it hasn't got an artificial ceiling. So
like RSI does and MACD does, all of those others have an artificial ceiling?
Yeah, I'm not.
Yeah, I mean like 100. Oh,
Yeah,
I see.
I'm not a big fan of things like stochastics and RSI, which have the artificial ceiling.
Oh, I see. Because you could go minus. You could go under zero. I see these minus 20 readings.
No, not so much. No, more in terms of you can just kind of make new highs in the price, but the oscillator says it's overbought, and then you're missing a lot of the move. Whereas a divergence in an indicator which doesn't have an artificial barrier is a real divergence, in my opinion.
Got it.
So that's that's the kind of theory behind that for me.
Okay.
So I think big picture, I think is dollar down from here, or roughly from here. Obviously, we can't pinpoint the exact turning point, but we can use shorter term stuff to to nail it and to trade from the short side. So looking for essentially back. I think ultimately we make new lows in this thing because the major trend is down. But step at a time. If we go back to the previous low from a couple of years ago, that wouldn't be too bad, I don't think.
Okay, where is that? Like 85-ish, something like that?
So we're talking on this one, it's like 84.32.
Okay.
Yeah. So there's a lot of big support in that region.
All right. Pete likes your chart.
Sorry?
One of our attendees is saying nice chart. So okay. So I guess the question is, if the dollar is heading lower, what are your preferred longs against the dollar during this time frame? Could it be commodity currencies? Could it be euro, cable? Could it be some of the emerging market currencies? How are you looking to play it, Howard?
Yeah, I mean, I like most of them because I think it's going to be quite a broad-based move. I don't like sterling quite so much because I think sterling is going to be suffering on a relative basis.
Okay.
Let me just go across to the, here we go, a bunch of charts we've got here. So just go through a few of them. This is euro sterling, for example. I think that sterling is going to be suffering across the board. That's why this one is staying quite strong.
Right.
So I think that we're going to be seeing some sterling underperformance against a lot of these currencies.
Okay.
Dollar yen. Sorry. Dollar yen. I think dollar yen has bored the hell out of most people, and just trying to sort of trying to imagine which way it's going to break one way or the other. But I think ultimately it breaks to the downside.
Okay.
We've been in a constricting range for quite some time.
Yeah, that's a nice looking descending triangle. I mean, it actually measures 75, doesn't it? 25 point range, breakdown under 100 would take both the dollar would go to new lows and the US dollar yen would go to new lows.
Yeah, I think obviously again with this one it's a frustrating one because the yen gets caught in the crossfire, or at least it has done for quite some time. But I think ultimately once this starts cracking through this 100 level, we're going to be off to the races on the downside. And
any of the correlations with US dollar yen that connects and reconnects many times? I mean, the obvious thing is if we're going to break down in the yen, I would expect lower yields in the US. And is there a possibility for risk off while US dollar yen is breaking down, or will it disconnect again from those correlations? Tough call, but
it seems to have been ignoring that one. Obviously, we've seen the gyrations in the stock markets, and dollar yen has not really done it. So I don't know whether that doesn't count anymore. The yen as the reserve, as the safe haven. I don't know.
okay.
It seems to be doing its own thing.
Okay. All right.
So I think we need to see. I think ultimately it breaks down, but obviously we need to see it back through 100 just to really kind of kick it off and be sure that we're away.
All right.
Other stuff. This is Euro Swiss long-term chart. Euro Swiss. So more Swiss. I think the Swiss is more of a safe haven than the yen, generally speaking.
Okay. So you'd be looking for another low here?
Yeah, I think that ultimately breaks down.
Okay.
And I'll come to dollar Swiss as well, which obviously once we get through a threshold on that one could be a real trigger for that kind of move. But yeah, I mean, long term, it's stuck in a range. It goes down. You get these big breaks down, but ultimately, the major trend in this thing is down. So I think this one eventually breaks. This is euro dollar monthly. So big picture euro dollar. We've had this kind of very begrudging decline over the last few years. No momentum in the decline, and it's really struggling at this these kind of big levels down here from a few years back. And I think the choppy action that we've seen of late is kind of indicative of basing.
All right.
So there's no real desire to take this thing down, down through these levels. So I think once we can get, break up through this 115 basically, we're away on that one.
Okay, and I will say that you called, I think it was back in 2016 or so, when you were bullish the euro, looking for 125. It's amazing. It's like 3 years ago we talked about that. We have some history here, but can you believe I remember your call from it?
I'm glad someone does.
Good one. Well, your P&L will. So who needs a fan club if you're making money? So really nice. That was a great call. So perhaps we get something like that, or maybe even some type of fib extension of that wave that we had from, what was it, 103 to 125, 22 cents. Maybe we get 1.618.
Yeah, 20. I mean, even if this thing's stuck in a range over the long term, I think we're at the bottom of the range. So
okay, all right.
Yeah. So if you're if you're bearish euro long term, then maybe it's a case of 120 and change, and then we top out, that kind of thing.
Okay.
But for me, looking through it through the prism of a weak dollar over the long term.
You're in Australia, right, Howard?
Sorry?
Are you in Australia or the UK?
I'm in Switzerland.
Oh my gosh, okay. Oh, you know what? There was a trivia question that my buddy asked me yesterday, where it asked, which country is it illegal just to have one gerbil? And they named Iran and all these other countries. Do you know what country it's illegal to isolate and just have one gerbil?
Go on.
Your country.
No.
Yeah, check it out. Switzerland has a law that it'd be illegal just to have. So if you have one gerbil in your house, you know what? I'm turning you in. Okay. Anyway,
let's keep it between me, you, and the rest of the
community. Let's keep it between you, me, and Richard Gere. Anyway, all right. So
we moving swiftly on. We digress.
Yeah, let's move swiftly. All right. So
okay. Just flipping through some of these things. Okay. So this is cable.
Yeah.
So obviously we had the breakdown briefly through the swing low a few months back, and then the snap back above it. And these are monthly bars, by the way. So right. We can.
Do we make a new low there, or head towards parity?
Well, that's the thing. It's, because as I say, I'm sort of in two minds, because I think the dollar is going down big time, but I think sterling underperforms. So maybe we just kind of like chop around these levels, around this kind of 120, 125.
So people buy anything and lay it off against the pound, and they should get good appreciation.
Yeah.
Long anything against cable.
Yeah. I think it's got potential to get these kind of like knee-jerk reactions, and we push down, but I think ultimately a weak dollar is going to support this thing longer term.
All right.
But as I say, it's not at the top of my list to buy against the dollar.
Okay.
Okay. So dollar Swiss. So this one has been a bit like dollar yen, been very boring for quite some time. But bearing in mind what I was saying about Euro Swiss ultimately being bearish, dollar being bearish, and I think even dollar yen eventually breaking down. We've got this level here at 91.87, which I think that once that goes, that will be the sign that we've seen the end of this whole correction from the swing low back in 2011.
So does the S&B? They're pretty much they try and control Swiss. They're one of the central banks that really are pretty active. Does that mean they're going to just let it go?
Yeah, well, you know, as you say, they do like to step in every so often. So you'll get these big bounces against the trend. But I think either it's going to be a Swiss move that's going to drive it much lower, straight away, or it's going to be just part of this downtrend that's unfolding in the dollar.
Okay.
So I think kind of a perfect storm. We start to break down, and then maybe we start to get some Swiss news as well that sees this accelerate eventually.
Okay.
But I think we need 91.87 and below to really say that all the people that have bought above it are long and wrong.
Okay.
So that's that one. Kiwi Dollar, similar kind. Well, Kiwi Dollar is basically a bit like cable in terms of it broke through the previous swing low, big momentum divergence on the breakdown, and now we're starting to work a little bit higher. So I think this could be quite a good one out the traps once the dollar starts to really go.
You favor that over Aussie?
Be honest with you, I've not really done a whole lot of Aussie Kiwi analysis. I think they both look pretty similar.
They are.
Fair.
Although, people trade Aussie Kiwi, there's outperformance of, I would think that Aussie would outperform, but, it's pretty much the same.
Yeah.
So, okay. Maybe
I'm quite positive on gold, so maybe Aussie does perform if we're talking commodity currency stuff.
Okay. All right.
Okay. Dollar CAD. So dollar CAD is rejected quite sharply from the previous swing high from a few years ago.
Yeah.
This one again, it's kind of we've come back into the range. I think there's a lot of people trapped above this on this kind of inverted head and shoulder or type thing here. So again, in line with general dollar weakness and maybe a little bit of commodity strength, this one perhaps comes back down and forms a big top pattern here.
Okay.
But I think not quite as aggressive on this one as I am on the Aussie and the Kiwi. It's not quite as clear, I don't think.
All right.
Okay.
Maybe that has something to do with crude too. All right. There's the Aussie monthly.
Possibly.
Okay.
Yeah. So a little bit similar to the Kiwi pattern where we had the swing low. We're in a downtrend, obviously, but we've had this big flush out to the downside amid some pretty bullish divergences here. Quite a sharp rally on the rebound. And we're back above the level, so we've got a lot of trapped short sellers here.
I love when people are trapped.
So
If
yeah,
it's not me.
I think we can. I think these things, the way they start off with a bit of a squeeze, and people don't really believe it, and then before you know it, you've got a trend developing.
Right.
So yeah, I think the Aussie looks to be pretty good for 80 plus levels initially.
Okay.
Euro yen, another not very exciting one like dollar yen. We've got this massive triangle which broke to the downside back last year. More sideways action here, and this month so far an attempt to go higher, but we're back down towards the previous month's close. So we're kind of like a long upper shadow on the candlestick here.
Okay. Yeah, that's interesting. Okay.
So
So
that
it
looks
was kind of like a test of the breakdown almost this month.
yeah, but it's kind of struggling to get back into the the old back above the old triangle support line.
Okay.
So again, we could see a big yen move ultimately, perhaps in line with the Swiss. But yeah, I think euro yen is struggling, so it could give some weight for dollar yen going down.
Okay.
And back to euro sterling. So what else did I want to say? Gold and the euro. Long term gold. Can you guys see the chart here?
Yep. Yeah.
Okay.
That's gold euro on top or gold dollar on top?
So got gold dollar and actually gold futures and a euro dollar spot cash.
Okay, I got it.
So essentially, we had the gold bull market. It got quite bubbly and accelerating back here.
Right.
So, and the euro didn't. It was making new highs up to that point. So we had this divergence here with lower highs on euro dollar. Ultimately, the bubble burst on gold here at the all-time high, and then we came back to more reasonable levels back in 2015-16. So we stabilized in gold, and then we got this kind of Dow theory buy signal here. Last summer.
1360. Yeah. 1380. Any chance of, with what you're seeing happening with the dollar, probably very low chance of it coming back to test that breakout anytime soon?
Gold, no, I don't think we're going to come back down here. I think the pullbacks are quite shallow now on gold.
Okay. You have a long-term target in gold?
Yeah, I think we've got to see this high. I think we've got to see the all-time high and go above it ultimately.
Okay.
This whole move from the all-time high to here is a nice corrective decline, in my opinion.
Okay.
So,
We were getting a question from one of the attendees. Do you follow crypto?
do I follow?
Yeah, cryptocurrencies, Bitcoin, any of that stuff? And
Not,
if not, what's your view on them, especially being a gnome from Switzerland? A lot of people are thinking it's going to be a good negative corollary investment against a problem with the dollar.
yeah, I'll be honest. I don't have a big view on the cryptos.
Okay.
I think it's all pretty much kind of it's quite volatile. It's just maybe momentum plays on that stuff, but I don't know in terms of value how to get a handle on the thing. To be honest with you.
Okay, fair. That's fair. So if you don't have any other charts, Howard, have you wrapped up what you wanted to talk about?
So the only other thing I wanted to say was I just wanted to show a couple of things here. This is sorry, let's just go back to the a couple of systems. At heart, I'm a systematic guy, although I do use Elliott from time to time for long-term views. But a few levels to watch based on some of these long-term trend-following systems that I use. I've got a system which works really well on dollar index, euro dollar spot, and previously in the past Deutschmark futures. I'm sure Dale, you remember those ones.
I remember Deutschmark, yeah.
Okay.
Yeah. Germany would like to go back to it, wouldn't they?
yeah. Back to the 70s. Back to the 80s.
Yeah.
Yeah. I was there in '77, and so was my hair. You know?
Okay. All right. You still have some.
So what I like to look at is a combination of obviously I'm sure people are familiar with Donchian channels.
Yes.
So I like myself on a weekly basis. I like the 30-week Donchian channel. That's quite a good one for currency, in my opinion.
Okay.
And but I use it in combination with a swing high, pivot low indication. So I'm using, for example, pivot high, strength 6. So the 6 bars to the left are below, and the 6 bars to the right are below the swing high, that kind of thing.
Okay.
And just quickly to show you a few things. This is Deutschmark, way back. This is kind of an equity curve if you follow the thing.
Okay.
So basically, it does okay in terms of calling the trend. 73% hit ratio on the Deutschmark back in the day, and that's the equity curve. And then you go along to the dollar index, 1985 to present day. So using exactly the same indicator, if you will, or system. So nice equity curve on that. Again, yeah, performance summary, profit factor is quite good. 61% hit ratio on the dollar index. And euro dollar comes in. So euro dollar is, let me just collapse these. So profit factor 638%, profitable 68%. Nice equity curve on the thing. So exactly the same trend following indicator I'm using back to 1976, from 76 to the present day, basically. So I think it can be quite a good one to watch. And the trigger levels based upon it, obviously no Deutschmark because we're not doing Deutschmarks anymore. But that 114.95, 115 on euro dollar above us, that is the trigger level for the buy.
Okay.
And dollar index, the trigger level for the sell is 94.50.
So what's the best way, besides your Twitter handle, for people to reach out to you and talk to you and follow you and maybe work with you? What do you have a business model right now?
Sure. Yeah, I've got a number of things I'm doing. I run what I call a excuse me, a model trading portfolio. Most of my algos actually are short-term from day trade out to multi-day swing. And what I do is I run a, if you will, a kind of a model portfolio for clients who want to gain access to really good algos that do very well over that kind of 1 to 5 day time frame.
Do you have a website, Howard?
Yes, I do. So
Why don't you show it?
I'll show it. Here we go. 1 second. So hf-systems.com.
You might have to
Okay, can you
stop
see that?
sharing your screen and do a new share.
Okay, new
Maybe,
share. Here we go.
if it's on a different.
Okay, new share. Share.
Okay, there's your disclaimer.
Okay, gone.
Okay.
And products and services wise, I run courses for people that want to learn how to do this profitably over the long term.
Okay, so it's hf/systems.com to get to Howard's website.
That's right.
And Howard is a CMT, so you know.
That's
That's
right.
a thing to have.
I've held CMT since 2004. I think I joined back in 1999.
Okay, and there's his email. Take a screenshot. And Howard's Twitter handle again is break retrace. There's a hyphen in between. You want to show your Twitter so people could maybe follow you. I don't know if you're that active on Twitter anyway. But
yeah, I'll be honest. I'm not. LinkedIn's quite a good one actually.
Okay, you're posting your stuff on LinkedIn. Okay.
Yeah, yeah. I think if people want to catch me, LinkedIn's quite a good one, or just find me an email. That'd be good.
Okay. All right.
And just on a parting note, on the model trading portfolio that I'm running, this is an account I've been doing for the past nearly 4.5 years. Basically, all of my algo system trades go directly on this account. This account gets copied to other accounts, and the account risk is 3%. The maximum drawdown on the account has been under 2%, and this is the kind of performance over the last 4.5 years.
That's really something. I'm more impressed with the maximum drawdown being down only 2 or 3%. So, and you risk what, 3% per trade, or 3% for the whole account?
For the whole account. So basically, okay. I trade maybe up to 10 algos at the same time. And the inherent risk on the portfolio is a 3% max draw from a high watermark, but historically it's never been above 2%. So I trade very conservatively.
Okay, and what's the status with COVID in Switzerland?
People are out and about. I went into town earlier on, and people are, they're doing the distancing, so they're being very, very careful about that. But it's not stopping people. People over here, they don't like to be told what they should and shouldn't do. So
yeah, you wearing people wearing a face mask
there's a few.
When they're out.
There's a few. I think there probably should be more, but I think the older folks in particular, they are really being very careful, obviously. But but yeah, I think life is kind of, it's going on. Okay,
and your email again? Didier is asking for your email again.
So hfsystems at gmail.com.
Okay, there it is. Take a screenshot, Didier. And Howard, I'm not going to make the same mistake and let yours pass again. So. No. I'll get a hold of you a little later on, and we'll schedule something for the fall. It was great to, talk to you. You've been my trading warrior brother for years now, right? If you forgot, I'm reminding you. And I want to thank you for coming in and sharing your looks and everything with our community today. And wish you, I've always rooted for you. I continue to. So thanks for being here to Edify Face, Howard.
Absolute pleasure, Dale. Thank you very much, my friend.
All right. It was great having you. Everyone, that's Howard Friend. You know how to find him. And that's going to be a wrap for us on the week. Remember, don't just count your pips, count your blessings. And same to you, Ariel. You're welcome. Shepard, everyone. See you guys all on Monday. Adios.